What is technical analysis? What is fundamental analysis? So hey guys, welcome back to the channel again. Hope you all are doing good. In today's video, we are going to talk about what are technical and fundamental analysis and also how they are different from each other. But before we begin, make sure you hit the subscribe and also press the bell icon too. Now let's get started. When it comes to analyzing financial markets, investors and traders employ various techniques to make informed decisions. Two popular methods are technical analysis and fundamental analysis. While both approaches aim to provide insights into market trends and potential investment opportunities, they differ in their methodologies and underlying principles. In this video, we will explore what technical analysis and fundamental analysis entail, their key differences, and how they are used in practice. Technical analysis. Technical analysis is a method of evaluating financial markets and making investment decisions based on the analysis of historical price and volume data. It is primarily focused on studying market trends, patterns, and indicators to predict future price movements and identify potential trading opportunities. The core premise of technical analysis is that market prices already reflect all available information, including fundamental factors. Therefore, by analyzing historical price data, traders can gain insights into market psychology and investor behavior, enabling them to anticipate future price movements. Technical analysts use various tools and techniques to analyze price data. These include chart patterns, trend lines, support and resistance levels, moving averages, oscillators, and momentum indicators. These tools help identify trends, determine entry and exit points, and manage risks. Chart patterns such as head and shoulders, double tops, and triangles are graphical representations of historical price movements that provide insights into potential future price behavior. Trend lines are used to identify direction of the market, and support and resistance levels indicate price levels where buying or selling pressure may emerge. Oscillators such as the relative strength index or stochastic oscillator measure overbought or oversold conditions in the market. Momentum indicators, such as the moving average convergence-divergence, provide insights into the strength and speed of price movements. Fundamental analysis. Fundamental analysis is a method of evaluating securities such as stocks, bonds, or currencies by examining the underlying factors that influence their intrinsic value. It focuses on analyzing the economic, financial, and qualitative aspects of an asset to determine its fair value and potential for future growth. Fundamental analysts believe that the market may misprice assets in the short term, but over the long term, prices tend to converge with their intrinsic value. By understanding the fundamental factors that affect an asset, investors can make informed decisions about buying, selling, or holding it. The key components of fundamental analysis include examining a company's financial statements, assessing its management team and corporate governance practices, analyzing industry trends, evaluating macroeconomic factors, and considering qualitative aspects such as competitive advantages and regulatory environment. Financial statements provide crucial information about a company's financial health, including its revenue, expenses, profitability, and cash flow. Ratios derived from these statements, such as price-to-earnings ratio, price-to-sales ratio, and return on equity, help assess its valuation and performance relative to its peers and historical data. Industry analysis involves understanding the dynamic and trends of the industry in which the company operates. This includes evaluating market size, competition, barriers to entry, and technological advancements that may impact the company's growth prospects. Differences between them. Technical analysis and fundamental analysis are two primary approaches used in financial markets to evaluate securities such as stocks, bonds, and commodities. While both methods aim to assess investment opportunities, they differ in their focus and the types of data they consider. Technical analysis relies on the examination of historical price and volume data to predict future price movements. It is based on the belief that market trends repeat themselves, and past price patterns can provide insight into future price behavior. Technical analysts use various tools and indicators such as moving averages, chart patterns, and momentum oscillators to identify buying and selling opportunities. They focus on market psychology, trends, and market timing. On the other hand, fundamental analysis involves evaluating the intrinsic value of a security by analyzing its underlying factors. This analysis looks at financial statements, economic data, industry trends, management quality, competitive positioning, and other qualitative and quantitative factors. Fundamental analysts seek to determine whether a security is overvalued or undervalued, and they use this information to make investment decisions. They often assess a company's earnings, revenue growth, cash flow, and balance sheet to gauge its financial health and potential for future growth. In practice, technical analysis is more commonly used by short-term traders and those who follow a more speculative approach. It is useful for identifying short-term price trends, support and resistance levels, and entry and exit points. Technical analysis can be employed across different time frames, from minutes to months. It is particularly popular in high liquid markets. Fundamental analysis, on the other hand, is frequently used by long-term investors who seek to build a portfolio based on the underlying value of a company or security. It is used to identify stocks that may be undervalued or have the potential for future growth. Fundamental analysis requires a deep understanding of financial statements and industry dynamics and is commonly used in conjunction with a long-term investment strategy. It is worth noting that some investors may use a combination of both approaches, considering technical analysis for short-term trading decisions and fundamental analysis for long-term investment decisions. Ultimately, the choice between technical and fundamental analysis depends on an individual's investment goals, time horizon, and trading style. So that's all about technical and fundamental analysis and how they are different from each other. If you enjoyed the video, make sure to smash the like and also subscribe to the channel. I'll see you in the next video. Till then, bye bye. Thank you for watching.